Yeah. Good evening, all the participants. Good evening, our faculty for the evening, Anil Gupta ji. So we warmly welcome you on this evening for discussion and webinar on LMS under GST. I would like to have this moment to introduce you properly. CA Anil Gupta sir is from Mumbai and is a professional with a 12 year of experience in the field of taxation and regulatory compliances for diversified fields, that is banking, financial services, insurance, construction and real estate, infrastructure, etc. He has been representing judicial at various judicial forums, and he is a very guest speaker of our on the topic LMS. So I would like to welcome you, sir, and I would hand over this platform to you for your kind pursuit. Thank you, sir.
Thank you. Thank you for the brief introduction and setting up the context. So let me just take you everyone to the webinar, which is there on IMS under GST. So is my screen visible? Yeah. Okay. So this invoice management system, which I'll be taking you through. So basically, this has been launched by the Goods and Service Tax Network, that is GSTN. It was launched on October 1st, 2024. It represents a significant transformation in the GST compliance landscape. So this advanced system introduces a layer of document reconciliation and verification, streamlining the entire invoice process for business across India. Even though it has been launched on October 1st, it was effective or operative from 14th of October 2024. So why IMS has been introduced? It has been introduced to improve the accuracy of the input tax credit by enabling the recipient taxpayers to reconcile their inward supplies directly with their suppliers' invoices on the GST portal, and that too on real-time basis. This initiative has been marked as a crucial step forward towards improving transparency and accountability with the GST framework, while advancing the goal of making Form GST 3B an auto-generated return. Through this IMS system, the taxpayer can either accept, reject, or mark document as pending based on the reconciliation with their own books of accounts or records. Thereafter, the data will automatically be flown to the GSTR 2B, and then it can be filed in GSTR 3B filings. The accepted records are included in Form GSTR 2B for claiming ITC, while rejected or pending records are excluded from the IMS dashboard. The invoices left without action or on which no action has been taken will be considered as deemed accepted, which ensures timely ITC flow for Form GSTR 3B filing. So what is the necessity of IMS in the GST framework? So when GST was implemented in 2017, it was proposed a two-way return filing system which aimed at accurate ITC reconciliation between the suppliers and the recipients. This involved auto-populating data from the supplier's GSTR1 into the recipient's GSTR2A, allowing the recipient to accept, modify, or delete entries while filing GSTR2. So any changes would reflect in GSTR1A for the supplier's confirmation, ensuring mutual validation before finalizing GSTR 3. However, there was complexities in this multi-process proved burdensome, especially for small and medium businesses. Constant reconciliations, ongoing communication between suppliers and recipients, and multiple filing obligations would make the system operationally difficult to implement. Therefore, to ease the compliance process, the government has introduced a simplified system requiring taxpayers to file GSTR 1 and GSTR 3B, that is a summary return, using auto-generated ITC system, that is GSTR 2A and now GSTR 2B for credit reconciliation. While this reduced the compliance burden, it also brought some challenges in the ITC accuracy. Many businesses encountered mismatches between ITC claimed in 3B and the supplier's filings, resulting in disputes, notices, and financial stress. The absence of real-time validation of the invoices or the records provided by the suppliers often led to denial or delay of genuine ITC due to supplier error or non-compliance. That is why, considering these issues, the government, with the help of GSTN, has now introduced IMS, which is designed to fill the gap due to permanent suspension of two-way return filing system. So what is IMS? What is invoice management system? Invoice management system, it is a communication channel. It creates a direct connect with the supplier and the recipient for invoice verification. Whatever invoices are uploaded by the supplier will flow into the IMS dashboard of the recipient. And if the recipient's record matches with the data flown by the supplier in the IMS, then it will be construed as an accepted, or the action to be taken by the recipient as accepted if the services or the goods are not procured by the recipient. For the details flown in the IMS dashboard by the supplier, then the recipient has to take a reject option, or if the records are not available in the books of accounts of the recipient, then the recipient has to mark that invoice or record as pending. So in a way, it is a communication channel between the recipient and the supplier. Also, it will serve as a reconciliation of the documents because it provides an additional verification layer for the transaction documents. When the IMS got implemented, so it is active since October 2024. It has been officially launched on the GST portal on 14th October 2024. It also simplifies the ITC claims. It streamlines the invoices, amendments, and input tax credit processes. So in a way, the government's objective has been accomplished with the introduction of IMS. The government aims to achieve the original objective of seamless ITC matching without the compliance burden of the two-way return filing system, which was a concept while implementing GST in July 2017. The invoice management system serves a very crucial bridge between the taxpayers, that is, the suppliers and the recipients, enabling smoother reconciliation of transactions and enhancing the accuracy of tax compliances. By providing a structured platform for document verification, IMS aims to minimize the discrepancies and streamline the entire input tax credit process. So timeline for the implementation, when it got implemented. So as I told earlier, the advisory has been issued by GSTN on September 3rd, 2024, announcing the introduction of IMS. On 17th of September 2024, there was an advisory issued for the step-by-step procedural guide, which was released. Then on October 1st, 2024, it was officially launched on the GST portal. And on October 14, 2024, the review functionality got activated for the taxpayers. So the implementation of the IMS has followed a carefully planned schedule to ensure smooth transition or adoption by the taxpayers. The gradual rollout approach has allowed businesses or the taxpayers to familiarize themselves with the new requirements while giving GSTN time to refine the system based on initial feedback. So this strategic timeline demonstrates the government's commitment to enhancing the GST framework while being mindful of the adjustment period needed by the industry across the country. Moving on. So there is also functionality available on the suppliers side, which has been issued on 13 November 2024. So there has been an enhancement allowing suppliers to view invoices, status, and recipient action, creating greater transparency in the reconciliation process. So whatever action taken by the recipient on the records provided by the supplier in GSTR1 will be viewed, which can be viewed by the supplier, thus creating a greater transparency in the reconciliation process. There has been an amendment in section 38, 39, 34, 1 in the CGST Act through the Finance Act 2025. It was also discussed and it was recommended by the GST Council in the 55th Council meeting, which was held in December 2024. Based on that, a budget recommendation to amend the GST law, providing legal framework for mandatory IMS implementation and compliance requirements, for which the amendments has been made, but the effective date are yet to be notified. So it has been anticipated that from financial year 25-26, the IMS will be mandatorily implemented, and there will be a transition from the optional to mandatory status with phased approach basis on the taxpayer category and the transaction thresholds. This development roadmap for IMS reflects a thoughtful approach to system enhancement and adoption. By introducing key functionalities incrementally, GSTN aimed to ensure that both suppliers and the recipients can adapt to the new compliance requirements without disruption of their business routines or operations. This phased implementation strategy recognizes the varying level of technological readiness across different businesses segments in the country, allowing for a more inclusive transition to the new framework. So what are the benefits of this IMS? It will enhance the GST compliance. So the overall improvement in tax adherence will be there. The amendment procedures, which are now a little complex in nature, it will get simplified. So there will be an easier correction of invoices errors, a streamless or a seamless reconciliation of the ITC, which will have efficient input tax matching. Also, there will be a error reduction in the ITC claims, which will have a fewer mistake in the credit processing, and a direct communication channel between the suppliers and the recipients. The invoice management system has been designed very specific objectives that address long-standing challenges in the GST ecosystem. By creating a direct communication channel between the transaction parties, the system aims to minimize errors and streamline the reconciliation processes. These objectives collectively contribute to a more transparent, efficient, and accurate tax compliance environment, benefiting both businesses and the tax authorities. The systematic approach to invoice verification is expected to significantly reduce disputes and enhance the overall integrity of the GST framework. How IMS will work? What are the basics? So there will be a system population. The IMS automatically will import transactions data from GSTR1 filed by the suppliers, the GSTR1A, that is the amendment in the outward supplies, and the IFF filing for quarterly return monthly payment categories, creating a comprehensive database of all business to business invoices. Based on that, the action taken by the recipient, a draft GSTR 2B will be generated on the 14th of every month, containing all the invoices requiring verification before ITC claim processing. Whatever action the recipient is going to take on each and every invoice, whether it will be an accept, a reject, or a pending, it will be based on the reconciliation with the internal records. Also, there will be a status tracking. That is, the system will provide a real-time tracking of invoice status, allowing both the parties to monitor the verification process throughout the compliance cycle. Whatever action taken by the recipient can be viewed by the supplier in his dashboard, and by this they can communicate. There will be a direct communication between the two. The operational framework of IMS is designed in such a way to be intuitive yet comprehensive, providing businesses with clear visibility into their invoice processing status. This system leverages existing GST filing to minimize additional data entry requirements while maximizing the benefit of proper reconciliation. The structured approach to invoice verification will ensure that the input tax credits are claimed accurately, reducing the future risk or disputes or reversals that could impact the business cash flow. With the help of the IMS dashboard, the recipient can reconcile the records, fine-tune their own GSTR 2B, and avoid the litigation or the future assessments very comfortably, which will have a very big impact, a good impact on the business cash flow. What is the workflow of the IMS? So the supplier of the goods or services will upload the records or the invoice details on GSTR1 or IFF on the GST portal. with all the requisite details. All the records uploaded by the supplier will get transmitted in the IMS dashboard. The IMS will validate submitted information against established rules and formats for the recipient review in the system. The recipient can review and access GSTR 2B on the 14th of the month and review all the invoices available for potential ITC claims. The recipient will take action. As I said earlier, the recipient can take action, either accept the record, reject, or keep it as a pending. If no action taken by the recipient, then it will be construed as deemed acceptance and the data will get transmitted in the GSTR 2B. A system upgrade is also required. Final GSTR 2B is generated only when the accepted invoice is eligible for ITC claim in the current period. The IMS workflow represents a structured approach to invoice reconciliation that brings a very clarity to the previously complex process of matching supplier and recipient records. Each step builds upon the previous one to create a comprehensive verification system. This systematic workflow minimizes human error, human intervention, while maximizing efficiencies in the tax credit claim process. By clearly defining the responsibilities of each parties, IMS helps establish accountability across the entire supply chain. What are the key features of IMS? Invoice verification and reconciliation is one of the key features of IMS. So, comprehensive system for matching supplier and recipient documents to ensure accuracy before any ITC is claimed. A real-time communication channel between the supplier and the recipient. It is needed for clearing any discrepancies arising on the particular records or record. A direct connection between transaction parties to resolve discrepancies quickly and efficiently. Error reduction in ITC claims. With the introduction of IMS, the reduction of errors in the ITC claims has been significant. Proactive verification process vis-a-vis erstwhile reactive verification. In proactive verification process, it identifies and corrects mistake before they impact any tax compliances and potential cash loss. Also, it has enhanced the tax transparency. So there has been a clear visibility into invoice status and processing for all parties which are involved in the transactions. Also, there is a supplier's view dashboard available on the GST portal. So these distinctive features of IMS addresses long-standing pain points in the GST compliance process. By providing both technological and procedural solution by the GSTN, the system elevates the standard of invoice management across the business ecosystem. These features work in tandem to create a more reliable and efficient tax compliance environment. The emphasis on real-time communication and transparency helps business maintain better control over the tax obligations and credit claims. With the introduction of IMS, there is going to be an impact on different taxpayers. So for the large taxpayers or the large businesses, they are expected to adopt early due to established compliance systems and systems, but they may have to adjust the existing ERP integrations. Taxpayers who are quarterly filers, they will face additional compliance steps with monthly reconciliations despite quarterly filing schedules. Small businesses, they are likely to get benefited from the phased implementation with potential threshold limits for lower transaction volumes. And all the taxpayer need to adjust to the internal processes, impart training to their staff, establish new reconciliation procedures regardless of the size. The introduction of IMS creates varying level of impact across different categories of taxpayers. While the ultimate goal of improved compliance benefits all, the implementation journey from voluntary to mandatory will differ based on business size, transaction volume, and existing technological capabilities. With the introduction of IMS, the taxpayers are going to benefit it. The taxpayers are going to benefit it with the enhanced compliance efficiencies, with streamlined processes and the time reduction and resources, improved cash flow management with better reconciliation. The ITC claim will get increased with better production of tax liabilities and credits. The invoices uploaded by the suppliers will now be tracked on real-time basis. There will be a constant visibility into the document status of each records. This will get benefited in the reduction of mismatches in the ITC, resulting into fewer disputes with the tax authorities. And ultimately, the accurate ITC will be claimed with proper verification of each records. While IMS introduces additional compliance steps, it offers substantial benefits that outweigh the initial adjustment challenges. Business will experience greater certainty in their tax positions, reducing the risk of unexpected liabilities during departmental audits or assessments. The system's emphasis on proactive verification, which creates a more stable compliance environment that benefit honest taxpayers. By addressing discrepancies early in the process, proactively, IMS help build a more reliable tax ecosystem for all the participants or the taxpayers or the businesses. With all the benefits, there comes challenges also in implementation of IMS. So what are the few challenges which the taxpayer may face or is currently facing? The additional compliance step. So now in the new verification process, the recipient has to undertake additional compliance or reconciliation, which creates a compliance burden. There will be a learning curve. The staff who is handling the ITC training needs to be imparted on the new system procedures. Technology adoption. With the new system in place, there is always a need for compatible systems and stable connectivity. Supplier compliances. So it also we need to ensure that the suppliers are timely doing compliances of accurate invoices. And these are all initial days for which the processes adjustment need to be taken, which ultimately result in slow compliance. The transition to IMS presents several challenges that business must navigate during the implementation phase. Most significantly, the addition of another compliance process requires allocation of resource and manpower and adjusting to the additional or existing workflow. Organizations must also address the potential resistance to change among staff and suppliers. So establishing clear communication channels with the staff and the suppliers and providing adequate training will be essential to overcome these challenges and realize the long-term benefit of this IMS system. With the IMS, what will be the impact on the ITC? And the IMS and the ITC go hands in hand. So there will be a direct impact on the ITC process. IMS fundamentally changes how input tax credit are claimed and processed. The system introduces a mandatory verification step before credits can be finalized in 2B. This verification layer ensures that only properly documented and matched invoices qualify for tax credits, creating a more stringent but reliable ITC ecosystem. There is an enhanced verification procedures. So before IMS, the reconciliation was done post facto, often leading to reversals and disputes, litigations. Now with the verification happens before the credit allowances, the significantly reducing the future complications. This proactive approach helps businesses maintain a clear tax credit position and minimizes the risk of departmental challenges during audits or assessments. With the introduction of IMS, there is an improved reconciliation process. The system creates direct alignment between the supplier data and the recipient claims, ensuring that the ITC is based on properly reported transactions. This synchronization reduces mismatches and disputed claims. As business adapt to this new framework, the quality of ITC claim is expected to improve significantly in the GST ecosystem. So the relationship between the IMS and the ITC represents perhaps the most significant aspect of this system implementation. By creating a structured verification process, IMS addresses one of the most challenging areas of GST compliances. So what is the current status of the IMS and what are the future plans? So in terms of implementation, currently it is optional for all taxpayers and it's going to be a mandatory with phased approach. On a legality framework front, it is facilitative, voluntary. However, with the amendments in section 38(1), 39, 34(2), which are yet to be notified, so there will be a legal framework or the legal constitution to it. Transaction coverage. So all B2B transactions will get covered under the IMS. In future, threshold-based implementation is likely to happen for all the taxpayers. System integration. Currently, a limited API access is available. However, in future, full API ecosystem for ERP integration is possible. User interface. It is a basic functionality presently available in the IMS dashboard. In future, enhanced with analytics and AI assistance, it's going to be a user-friendly and more informative. The evolution of IMS from its current optional status to a mandatory compliance requirement represents a significant shift in the GST landscape. The government's phased approach demonstrates awareness of the implementation challenges while maintaining commitment to enhanced compliance standards. Businesses should view the current optional phase as an opportunity to adapt their processes ahead of mandatory implementation. Early adoption will allow organizations to identify and address operational challenges before they become a compliance risk. So early adoption of the system and addressing operational challenges is a key for any taxpayer and for the successful implementation of the IMS. What are the do's and what are the best practices for the recipients? Review draft GSTR to be promptly. So they can set calendar reminders for the 14th of each month to thoroughly review GSTR 3B. This will ensure adequate time for addressing the discrepancies before finalization. Communicate proactively with the suppliers through the communication channel. Established direct line of communication with the suppliers about invoice mismatches, preferably through documented channels like emails for future reference. Maintain digital action records, keeping comprehensive digital records of all actions taken in the IMS, including screenshots of acceptance, rejection, and pending decisions, and keeping an Excel of the records. It's also a good thing, a good practice. Implement regular reconciliation. Develop structured internal process for reconciling purchase records with GSTR 2B data on a consistent schedule. With all the practices discussed aforesaid, recipients play a very crucial role in the IMS ecosystem as they are responsible for verifying the accuracy of the invoices and determining their eligibility in the ITC claims. Following these best practices will help ensure smooth compliance with maximum benefit of the system, thereby reducing future litigation and assessments. The proactive approach to invoice verification not only improves the GST compliances, but also strengthens supplier relationship by addressing discrepancies before they escalate into disputes. What are the do's and what are the best practices for the suppliers? Suppliers should ensure that they upload the accurate information of the invoices in GSTR1. Ensure all the invoices details are correctly entered or reported in GSTR1 or the IFF portal. ensure by double checking the GST number, invoice values, tax amounts, dates before submitting the returns in order to prevent the reconciliation issues thereafter. Respond promptly, address recipient communications about invoices discrepancies, make sure the mails get replied within 24 to 48 hours, quick resolution of the issues, prevent delays in payment processing, and maintain healthy business relationship with the recipient. The functionality available on the GST portal for the suppliers can be viewed regularly by the suppliers. Check the supplier view functionality at least weekly to monitor the status of uploaded invoices. This proactive approach helps identify potential issues before they affect business operations and delay in the payment processing, which is very critical aspect for any business. Suppliers must adopt disciplined practice to ensure the invoices pass through smoothly through the IMS verification process. Timely and accurate uploads will not only facilitate compliance but also strengthen client relationship by demonstrating reliability and professionalism. And this will impact or in turn will give a good benefit to the supplier and prevent delays in payment processing. By embracing or adopting these best practices, suppliers can minimize the payment delays and reduce the administrative burden associated with resolving invoice discrepancies after they have escalated. What are the current or practical challenges in IMS which are now being faced by the taxpayers? So there is an automatic escalation of the supplier's liability if any records or the invoices are rejected by the recipient. The liability of the supplier gets increased automatically in GSTR 3B, resulting into additional cash outflow. Auto increase in supplier's liability if the recipient rejects the original credit note or the credit note reflecting an upward value adjustment or downward value adjustment if the original credit note gets rejected by the recipient. So it's not only the invoices but also the credit notes issued by the supplier. If they gets rejected by the recipient, there will be an additional escalation of the liability. However, there lacks a clarity when the supplier issue credit notes against an invoice for which the recipient has already reversed the ITC either partially or fully suo moto due to reasons such as blocked credit under section 17(5) or the ITC which has been used in the exempted outward supplies, or ITC reversed as per rule 4243, or rule 38 reversal. So if the recipient has already reversed the ITC suo moto and afterwards the supplier issue credit note, so what action the recipient is going to take, that needs clarity. Currently, the recipient has no option but to reverse the ITC, leading to additional cash outflows. Alternatively, they are also ignoring the credit notes, which in turn having impact by way of notices or disputes by the GST department. Also, the rejected credit notes of the invoices on which the liability has been increased on the supplier side, there is always a question on the interest for which there is a lack of clarity on whether interest would be applicable or would be levied on the incremental tax liability arising due to recipient's action, and if yes, from which date? From the date of reporting of the invoice in GSTR1, or the payment or the rejection of the invoice by the recipient, or from GSTR3B filed by the supplier. So there is a lack of clarity from which date the interest should be calculated. So necessary guidelines on the interest calculation and the relevant period are required to prevent undue financial burden on the suppliers. In the IMS, there has been certain exclusion. One of the exclusion is ISD. However, ISD, as you all are aware, it is a mandatory registration from 1st of April 2025 wherever required, and it plays a significant increasing important role in the GST ecosystem. However, the current IMS framework does not extend its functionalities to the ISDs acting as a recipient. With the exclusion of the ISD in the IMS, it could potentially result in inconsistencies within the IST reconciliation framework under GST law, defining the purpose of the IMS. These are the basic or the few challenges being faced by the taxpayers after the introduction of the IMS. As I told you before, IMS is optional at present. Once it gets mandatory, so there has to be a preparedness. These are the basic steps which the taxpayer should adopt before the IMS gets mandatory. So the taxpayers should process, review and update, should review and revise the accounting workflows in the system, imparting trainings, educate staff on the system operations, on the reconciliation process, establishing communications with the suppliers, giving clear mandate on filing the records on or before the timeline, so that the benefit of the ITC may not be denied or may not be postponed. There has to be a contingency or the backup plan with adequate resources available for the reconciliation in case the taxpayer face any issues during reconciliation process. So as IMS transition from operational to optional to mandatory status, businesses must take proactive steps to ensure readiness. The preparation process should begin at least 3 months before the anticipated mandatory information implementation to allow adequate time for system testing and process refinement. Organizations with high transaction volumes should consider automation solution that can integrate with the GST portal through APIs. This investment in the solution can significantly reduce the manual efforts required for compliance while minimizing the risk of human error and intervention in the verification process. So what are the common issues faced by the taxpayers and what are the solutions to it? Missing invoices in the IMS. So the taxpayer should establish a weekly meet with the suppliers, create a shared calendar for the invoice submission deadlines, implement automated reminders for outstanding documentation, follow up with the suppliers to upload the records or the invoices and file GSTR1 so that it can be visible in the IMS dashboard. Maintain backup document of all the transactions records, which can be helpful in the future assessment. Incorrect entries or records in the books or the IMS. Reject invoices immediately with detailed reason. Provide screenshot evidence of discrepancies to the suppliers. Create template for common error notifications. Document correction requests and responses. System delays. If there is a system delays due to introduction of IMS, take screenshot of attempts with stamps, timestamps. Maintain logbook of portal access issues. Avoid peak hours for large batch processing. Consider dedicated internet connection for GST activities. Data management. Implement specialized reconciliation software. Create structured data storage system. Establish regular backup procedures. Develop standardized naming conventions. Proactive issue management is very essential for smooth IMS implementation. By anticipating common challenges and establishing standard resolution procedures, businesses can significantly reduce the compliance burden associated with the new system. Many of these issues can be prevented through proper preparation and process design. However, having established resolution protocols ensures that when problems do arise, they can be addressed efficiently without disrupting normal business operations. What is the future of IMS? So with the help of IMS, invoicing integration will be possible. There will be a seamless integration and a complete connection with invoicing with the IRP portal. There will be a threshold evolution, gradual reduction in exemption thresholds for applicability of invoicing and anticipated IMS mandatory. enhanced analytics, advanced reporting and business intelligence, mobile accessibility, comprehensive app-based management, AI-assisted reconciliation, automated matching and discrepancy resolution with minimal human interference. The invoice management system represents just the beginning of a more comprehensive transformation in GST compliances. Future enhancements are expected to further streamline the process through increased automation and intelligence, reducing the manual intervention required for compliances. The organizations should view IMS as a static system and an opportunity, not as a static system, but as an evolving platform that will continuously improve based on user feedback and technological advancement. This perspective encourages investment in adaptable processes that can grow with the system rather than rigid structures which may become obsolete. Some system navigation tips of the GST portal. How to access IMS. On the portal access the IMS through the service menu option available on the GST portal dashboard. Look for the invoice management system option under recipient service. There is also a filtering option available. Use advanced filters to sort invoices by the supplier's value, by the supplier's name, date range, or status, filing status, for more efficient review of large volume transactions. Also adopt a practice of regular saving of the records. Click on Save Progress frequently during review session to prevent data loss due to session timeout or connectivity issue. Also, there is a feature of bulk action available on the IMS dashboard. Utilize the bulk action IMS feature to accept or reject multiple invoices at the same time with similar characteristics simultaneously. With the bulk option available, the recipient of the services or goods can save upon the time and efforts and can take action on the similar records at one go. Navigating the IMS effectively can significantly reduce the time spent on compliance activities. The system includes several productivity features that are often overlooked by new users but can dramatically improve efficiency when properly utilized. So consider the IMS as an opportunity rather than a cumbersome activity. Also, familiarize your team with these navigation tips, which can transform what might otherwise be a cumbersome process into a streamlined workflow. Regular practice with these features during the optional phase will prepare the organization when the IMS becomes mandatory. So what are the key takeaways from the IMS? Taxpayer has to stay updated on any regulatory changes, officially monitor the announcements throughout 2025 year, regularly monitoring required, implement consistent reconciliation procedures, establish a communication channel with the supplier, approach a proactive preparation, begin implementation before mandatory deadline, fundamental compliance change. IMS transforms the GST landscapes. The invoice management system represents a paradigm shift in GST compliance that will impact every business engaged in B2B transactions. While the initial implementation may present challenges, the long-term benefit of improved efficiency or accuracy, reduced disputes, and enhanced cash flow management will deliver significant value to compliant business in the near future. By embracing the recommendations outlined in this presentation and adopting a proactive approach to implementation, your organization can transform what might otherwise be a compliance burden into a strategic advantage. Remember, early adoption during the optional phase provides valuable experience that will position your business for success when the system becomes mandatory. This is all from my side. Thank you. Any questions? So there is a question from one of the participant that after accepting the IMS purchase invoices, the total amount not get transferred to the GSTR 3B. Why? And it way out? That is, can ITC be claimed as per Excel downloaded from the IMS dashboard? So there can be instances wherein the supplier must have filed the return after the timeline or the deadline, and the details may get auto-populated or reflected in the GSTR 2B in the subsequent month. If the supplier has filed the return on time or within time, and if that transaction is not covered under the exclusion part of the IMS, then it will definitely get covered in the IMS dashboard, on which the action can be taken, and it will get reflected in the 2B. The taxpayer can recompute or regenerate the 2B and find the record. Also, there is a question: credit note raised in March 25 for invoices pertaining to July 24. Now client rejected credit note in IMS stating that invoice not booked in his records. Now my GST liability increased due to rejection of credit note and can't be amend invoice as books closed for the last financial year 24-25. If amended on the portal, then there will be a reco between books revenue and portal revenue. So for the credit notes which has been raised or issued in March 25 for the invoices pertaining to July 24, there is a time limit available. However, the taxpayer has rejected the credit note, then the supplier can resubmit the credit note with the direct communication channel available on the IMS dashboard and avail the benefit of the credit note. What to do if the credit note issued rejected by the customer? As of now, table number 3.2, outward supplies is not freezed. So the taxpayer or the supplier, if the credit note issued is correct and the recipient has inadvertently rejected the credit note, then they may reduce the liability. However, the supplier must get immediately connected with the taxpayer or the recipient for the reasons of rejection of credit notes. Also, there is a question, can you please assist in the situation invoice deemed accepted in IMS portal, but customer rejected the credit note, stating that not recorded invoices as well as credit note resulted in increase in the liability in the next 3B. As I said earlier, the auto-populated or the increased liability in the supplier's dashboard can be edited and the correct liability can be discharged by the supplier. Also, the supplier should directly communicate with the recipient for the reasons of rejection of the credit note and taking an assurance that no such rejection of the credit notes should be possible or should be encouraged. There is a question how to implement IMS in case of more than 500 documents, because there is no option or tool. You can download the Excel version of the IMS records and then take the bulk action and then re-upload that documents on the GST portal. Another question, major issue is that the recipient tend to reject the credit notes, but in actual the said credit notes are correct. In this case, we change our sale in GSTR 3B after reducing credit note, and thereafter we amend the credit notes in the next month GSTR 1 to 0 the which gives the correct trail of amendments. This has been a practical challenge for all the taxpayers, all the suppliers, wherein the recipients either directly expense out the invoice which are not available in the ITC ledger, and the accountants or the stakeholders reject the credit notes. In that scenario, a discussion with the supplier, with the recipient is required to understand the gap to avoid the future possible rejection of the credit notes. Also, for the credit notes which have been rejected, the supplier may reduce the outward liabilities in the following month in which the credit note has been accepted by the recipient. Our client is in real estate business. As of now, we are keeping all ITC in pending since we are not claiming. So is it a right practice, or we should accept all ITC and made it zero in the GST 3B return? So whatever records are matching with the books of accounts, the taxpayer should accept those ITC in order to avoid any possible cash outflow. And whatever documents or records are not matching or available in the books of accounts, those transactions be kept as pending until it is matched, subject to section 16(4) of the CGST Act, that is the timeline to take the credit. Also, there is a question on how can I address the issue of genuine credit note being rejected by the client on IMS, resulting in increase in outward liability in system generated 3B. So as I told in my webinar or my this thing presentation, so it is a practical challenge which the industry is facing, which I think the department should look into it and issue a clarification or advisory immediately. Till then, the taxpayer may pay the liability of the credit notes rejected by the recipient and reduce the liability or take the benefit of the credit notes once the invoices or once the credit notes are accepted by the recipient subsequently. What are the steps to follow if the supplier issued a wrong invoice and a credit note for the same, but has neither been submitted to the recipient? We cannot reject the credit note. You can take the action, whatever available on the IMS dashboard, whatever invoices or the credit notes issued by the supplier needs to be passed through the IMS dashboard. Once it is reflected in the IMS dashboard, then only a taxpayer can take action on the same. In that case, if the records are not available in the IMS, nothing can be done. What dates the IMS verification to be carried? As to be uploaded by portal latest by 14th of the month. As you all are aware that for the monthly compliance, outwards monthly taxpayers, GSTR 1, the due date is 11th, and for quarterly returns, the due date is 13th. So it is better to do the verification or the reconciliation process on 14th of every following month. How IMS helps the buyers, wherein suppliers filing quarterly returns in availing ITC on monthly basis. So the suppliers who are filing quarterly, they have an option to upload the invoices on a monthly basis in the IFF portal. Once the invoices are uploaded by the suppliers, it will get reflected or visible in the IMS dashboard, which can be availed by the recipient by accepting the records. In case of credit notes, pending option is not available in IMS. If credit note is not accounted due to some issue, how to handle it? So in case of credit notes, there are only two options available: either accept the credit notes or reject the credit notes. The credit notes may be rejected if the original invoice, the ITC of the original invoice has not been availed, or the services or the goods does not belong to the recipient. Otherwise, if the services or the goods are availed by the recipient, then the credit notes must be accepted. There is also one practical challenge wherein the ITC of the original invoice is not availed and has been suo motu reversed. After, however, subsequently the supplier issue a credit note, what will be the impact on that needs clarification from the department. If an invoice is received for car repair, we accepted it and reversed in table 4B1 as permanent reversal. If a credit note is received after that, we have to accept it, and our ITC got reduced as there is no option to mention that we have already reversed it as a permanent reversal. I agree with you. If the ITC of the original invoice has been reversed suo motu under permanent reversal under table 4B1, and subsequently the supplier has issued the credit note, then there is only two options available: either accept or reject. By accepting, it will reduce the ITC under table 4A5, and it is not advisable to reject the invoice since the services have been availed by the recipient. So there is a practical challenge for which clarity is awaited from the GST department. How to do IMS activity in case of more than 500 invoices? As I told earlier, download the Excel sheet available on the GST portal from the IMS dashboard. You can also perform bulk action. All the actions taken will have an impact in GSTR 2B, and the records for which no action has been taken, it will be deemed accepted and it will get flown into your GSTR 2B. There is a question: if someone do not take any action of accept or reject or pending, on the portal in the IMS section, then exactly on which date the invoice on which no action is taken will get transferred to 2B automatically. So as I told earlier, on every 14th of the following month, the system will generate 2B automatically. The taxpayer or the recipient can take action on the records available in the IMS dashboard and recompute the 2B. 2B can be recomputed or actions can be taken, can be changed anytime. There is no limitation. Until the 3B is filed. Once the 3B is filed, the system will not allow to take any action on the IMS on the accepted records or the action taken on the records. There is a question: if the input has been already reversed by the buyer under Rule 42-43, but credit note is issued later, what is your opinion to address it? So as per Rule 42-43, whatever credits has been reversed suo motu and the credit notes are issued later, this can form a part of reconciliation, wherein the ITC has already been reversed and later on it has been issued by the supplier. So in that scenario, it can form a part of reconciliation, which may be helpful during assessment. If someone do not take any action of accept or reject or pending on the portal in the IMS section, then exactly on which date the invoice on which no action is takes will get transferred to 2B automatically on the 14th of the following month. It will be construed as deemed accepted and all the transactions in the IMS dashboard will get reflected in 2B. If some invoices is accepted in 1 month, can it be rejected in the subsequent month? If any invoice on which action has already been taken and it forms part of GSTR 2B, for that particular transaction, no action can be taken. However, amendment is possible. You can opt for the amendment. Is there any option to reject invoices reported under RCM section? So under IMS, RCM transactions will not be a part. There are certain exclusions to the IMS, like the transactions wherein there is an issue of POS, that is place of supply, or the transactions as per GSTR 6, or there is an import of goods. Reverse charge records will not form part of the IMS, and the documents where ITC is eligible, as I told, place of supply or section 16(4). All these documents will not form part of IMS. and it will get auto-populated directly in the GSTR 2B. There is a question, if I reject the invoice, what is the impact to the supplier? If the invoice is rejected, the supplier may get a notice of fake invoice. There will be a implication on the GST front as well. On the litigation side, penalty will be invoked under section 122, or a general penalty can also be imposed under section 125. There is a question, what are the consequences if we accept all the invoices every month but do not take ITC in 3B of those invoices which does not belong to us? This is a wrong practice, as IMS is there for the benefit of the taxpayer. By accepting all the invoices and the credit notes, you are accepting those invoices as well wherein the supplies has not been made, or the availment or the services has not been availed, or the goods has not been procured by the recipient. So it's not a good practice. Acceptance of the records, of those records, can only be taken if it is matching with the books of accounts, and rest of the invoices can be marked as pending, subject to section 16(4) of CGST Act, the time limit. I hope I have addressed all the issues. Over to the indirect tax committee. I have addressed all the issues and I have concluded the webinar.
Yes, sir. Thank you, sir. Thank you for your valuable time and your inputs on IMS. I hope participants would have gained a lot from this session. I, on the behalf of GST and ITTC committee, would like to thank the participants and the faculty, Anil Gupta sir, for this evening. Thank you, sir, for your time.
Thank you. Thank you all.